All right, good morning. Welcome to another edition of learning more about funding opportunities that are available to you. This morning, we have Laura from the Commerce Center and we have the team from Brinker Simpson to help you understand all of the opportunities that are out here or out there for you in terms of funding for your business. We're going to start with Laura, and then we are going to go to the Brinker Simpson team and they will talk about their respective areas of funding. Laura, thank you so much for being with us today.
Thanks, Trish. So right now at the Commerce Center, we are administering the state CHIRP program. CHIRP stands for CV-19 Hospitality Industry Recovery Program, which sounds rather broad, but it's not by statute from the state of Pennsylvania. This program is only available to industries that are covered under the North American Industry Classification Code of 7.2, and that would be 7.2.1 for accommodations and 7.2.2 for food and drink services. So that's your hotels, your motels, sandwich shops, cafes, full service restaurants, and limited service restaurants where you go to a counter and pay for your food before sitting. That application is available online at our website, delcostrong.delcopa.org. So while we did decide to use the same moniker that we have used for local grant sources for stabilizing our business community, it is not a county source of funding. It is not County CARES Act money. This is separate funding that came from the state out of their Workman's Comp Fund that has been distributed to every county in the state of Pennsylvania. So while we're doing Delco CHIRP, Chester County also has the same program. So does Philadelphia, Montgomery, Bucks, Lancaster. They all have been running hospitality industry programs. All of our colleagues in economic development across the state. We did actually post on our Facebook a few weeks ago. If you are a business owner with a restaurant in Delaware County as a separate entity and also has a restaurant in, say, Chester County or Philadelphia, we have on our Facebook a list of those programs, how to access them in the different counties in addition to Delaware County. If your business is located in Delaware County, meaning that all of the operation of that business, the restaurant or the hotel, you would apply through Delaware County. Your application will require an application questionnaire being filled out, basic information on the business, your physical address versus your mailing address. If the tax return has an address that's outside of Delaware County that doesn't show the physical address, we're going to ask you to verify whether you own that property separately through a real estate holding company, either in whole or part. Or if not, if it's 100% lease, we're going to ask you to send us that entire lease, the current fully executed lease with it. In addition to that application, we are also asking that you submit your 2019 federal tax return, your 1065 or your 1022. I always get that wrong. Kristen's going to correct me. It's either 1020 or 1022 or 1022S to establish your 2019 revenue. And then if you do have your 2020 business tax return complete, please submit that as well. We also need profit and loss statements or income statements for every operating quarter in 19 and 20, just by quarter, Q1, Q2, Q3, Q4. If your business operation started in 2018, we should have 8 full quarters. If you didn't start until July of 2019, then we'll only have 6 quarters. We will take any entity that began operating, meaning you were transacting business before February 15th of 2020. So it could just be those 4 quarters of 2020. And of course, you wouldn't have a 2019 tax return in that instance, and we're aware of that. There is priority in applications that were set by state legislation. Things that you would normally think of, like you were mandated to shut by the governor, or you experienced the loss of 50% or greater for Q2 through Q4, which is the March through December of 2020, which is when, COVID was in full effect. Or, for instance, you haven't been able to source any other CV-19 relief programs. So at this juncture, what we're seeing right now so far is pretty much everybody has been able to source other CV-19 relief programs. We are seeing quite a few entities coming in with losses from revenue of 2020 versus 2019 greater than 50%. And of course, the shutdown is sort of relative. It's, okay, well, I didn't have the ability. We're sort of taking that into consideration in the reflection of the loss of revenue that is there. There has been apparently some confusion. If you received Delco Strong, are you eligible for this? Yes, absolutely. You could have received EIDL, PPP, the state Main Street grant program, and Delco Strong and still be eligible for CHIRP. What you're not allowed to do is if you're awarded CHIRP funding, you're not allowed to take that CHIRP funding and match it or pay the same issue twice. So, this would, of course, again, address operating expenses within the business. You're not allowed to take CHIRP funds and pay for a payroll the same way that you also used PPP to pay for payroll for that same quarter or that same individual. So the ineligibility that is listed there is not saying you're ineligible if you've received other CV-19 relief. It is simply stating that you cannot pay for the same thing twice with two sets of money other than your own, or double pay for that instance. We are providing assistance, technical assistance if you're having issues uploading your application. Questions are being directed to tech support at delcopa.org. And that's because we have a separate IT firm that helps us with that back end. Questions on applications and qualifications and what's needed to submit, we're answering those questions via email just because we have a lot going on in this office at the moment. That's the best way to facilitate at help@delcopa.org. And again, our application process is open through April 12th, which is a Monday at 3 p.m. So while we don't say wait until April 12th, if you're asking a question today, we can probably answer it so that you can then address it tomorrow to be able to get that submission in. I will wait to see if there's any additional questions, but of course, the grants awarded are going to be based upon the annual revenue from 2019. And we have some pretty hefty grant amounts we can award in $5,000 increments all the way up to $50,000. The eligible grant uses, you can use it for alleviating those revenue losses and pay eligible expenses between March 1st of 2020 up until the date of your application. So you have greater flexibility. If you received PPP or Delco Strong in 2020, those of course went to pay operating expenses in 2020. We've already basically are closing out first quarter of 2021. So if you applied today and needed additional resources to be able to pay for some of those operating expenses in the first quarter of 2021, you certainly would be able to do that. Like I said, again, all of the information is on our website, including how to apply. And if you have any additional questions, we do have sample material up there in terms of the sample profit and loss, where to find your NAICS code, and also what those questions are before you begin that application process. And with that, I will gladly hand it over to Brinker Simpson for updates on the hospitality industry.
Thanks, Laura, and thanks, Trish and Jessica and the Chamber, and welcome to the participants today. Laura covered all of the, we'll call them state and local grant money, and I know a lot of our clients who are in the restaurant business have already inquired about the CHIRP grants. Even on a larger scale than that, we're going to talk about what's available from the federal government as it correlates to what Laura had just explained, help for the restaurant hospitality industry. And then we're also going to touch on a couple of items that every small business needs to know. PPP has probably been beaten to death by this point, but it is still available. It's still out there. If you haven't if you haven't achieved your 2 PPP loans, if you qualify for the second one, which I'm assuming most restaurant owners will, make sure you get that money. We're also going to discuss the Employee Retention Credit, ERC, which is a very lucrative government program to reimburse companies for payroll costs for companies that were either had a severe loss in sales during 2020 and 2021, or also were closed by government action, which of course includes restaurants. Restaurants probably qualify for both, but If you were a restaurant, one of the rare restaurants that did not suffer an economic downturn during 2020, we actually have a client with a restaurant in Chester County who has revenue increased in 2020 by about 10%. He still qualifies for the ERC because he was closed by government action. So those are things that you have to know. We'll go over the Restaurant Act that's coming out shortly by the federal government. We say that it's an act that has been written, has been signed by the president March 11th, but the details of that have not been released yet. So we do expect that by the middle of April, we'll call it, that all of the details of how you get that money will be released, and that money can be very substantial for your business, depending on what type of loss of income you had in 2020. So we'll go into our slides. We have them on.
So we don't, if Jess or Jacqueline can hear me, okay, here we go. Thank you.
We're going to share some slides. We did use this for a larger presentation.
Okay, you can start
Just give us a
sharing.
second.
All right, just have to be able to. Thanks.
Okay, so we're calling this the Restaurant Rebound, and it is certainly a program designed for restaurants. As Lauren had said about the industry codes, if you are code 72, you do qualify for the restaurant program as well. There are a couple of nuances in the code there. For instance, if you're a venue that also has food, you could qualify for the Restaurant Rebound. If you are a public company that owns a restaurant, you would not qualify. And if you have a restaurant group that has over a certain number of restaurants, you would not qualify either if they're all interrelated. So we always put our disclaimer up there that we're not giving out advice, we're simply sharing information. And we do recommend that you consult with your professionals, accountants, and bankers, especially. SBA professionals are in the area. Make sure you reach out to them to get the details. So what is the Restaurant Revitalization Fund grants? Who is eligible? So we're just going to call them restaurants, food trucks, carts, caterers, bars, saloons, taverns, lounges, tap rooms. All of those eating and drinking facilities qualify for this round of funding, this new round of federal funding. How much is it? So you could get up to the lesser of $5 million for a single restaurant, or up to $10 million if you have 2 or more locations. And it's based on your 2020 receipts or revenue over your 2019, the loss of revenue in 2020 over the 2019 revenue. So whatever that shortfall is, so let's just use an example. If you did $2 million in 2019 and you did $1 million in 2020, then you've got $1 million of eligible funded money. So the government is going to reimburse you your lost sales, not your lost profits, not your lost costs, not your payroll costs. It's going to reimburse you your lost sales. For restaurants that, there's a little bit of fighting in the restaurant industry right now. So for restaurants that really became creative and retooled and pivoted and did all the things necessary to try to sustain their business, outside dining, catering, delivery, pickup, and they were able to sustain their business and their revenues did not fall off in 2020, they'll get nothing out of this act. The restaurants that, this is where the conjecture comes in, the restaurants that did nothing to combat that are going to get a lifeline here because they're going to get funding for their lost sales. If you opened your restaurant during the pandemic, there are some special eligible expenses that can be reimbursed during the time in the program. Now, again, the program has not been rolled out yet. The rules, the description of the program is written, but there are no rules written yet, and there are no applications for this program. If you receive the PPP loans 1 and 2, you would need to deduct those loans from your application. So anybody who did receive that money, I guess we won't say they received it in vain if they were in the restaurant business, but they went through all of this work and they spent their money on payroll and other costs and they followed all the rules. And had they not received that money, they'd be receiving it right now in the new program. So I won't say a lot of that work was wasted, but nobody knew that this program was existing a year ago. It just really came out, and it actually came out at the end of the year. It was signed in March. So you would have to deduct your PPP money from your grant money to get the net grant. So again, if your sales were down by $1 million and you had 2 PPP loans that were $200,000 each, you would have $600,000 grant available from the federal government. What's that money used for? Here are the eligible expenses. It's almost everything that you spend to run your restaurant. There are a couple of exclusions, but very few. The biggest exclusion would be, and like Laura said in her program, is you can't use this money to pay payroll costs if you had received employee retention credits, ERC, which we'll talk about towards the end. If you received ERC money, you can't use the payroll from that program to get reimbursed in this program. But all your other expenses can be used. So if you look at the example of the restaurant that was doing $2 million and now did $1 million, I'm going to assume it had a very, very low profit margin, if any profit, since the sales were reduced. That company gets a $600,000 grant from this program. They have to spend that money by the end of the year. It's likely that they'll be able to spend that money by the end of the year. So this money is tax-free as well, which is kind of amazing because the government is replacing your income. In the other programs, in the PPP program, they were covering payroll and other costs. In the ERC program, you were getting credits for payroll, so it's money that you spent. In this program, they're replacing lost sales, and it's still tax-free as part of the situation. So you can't get grant money to cover the ERC. And again, it's very confusing. All of these programs together are very confusing. We are telling you that the program is not ready yet, but be prepared. And if you have not created your SAM application, which we're detailing here, make sure that you get that prepared and get on the list with SBA so that you're ready to go once this opens. We're calling this the RRF program, and you'll see at the bottom we're saying that the application is expected to look like the SVOG, which is Save Our Venues program, which is opening on 4/8. And that's SVOG is a program for venues that are not necessarily food-based, but entertainment-type venues. So places like, I know Drexel Brook locally would qualify for this because of the entertainment factor that they have. We're the accountants for Helium Comedy Clubs, and they would qualify for that. They were shut.
For most of the year.
Yeah, they were shut for most of the year. So the SVOG program reimburses them a certain percentage of lost sales, just like the RRF program is going to do the same thing for the restaurant industry. So the government comes in, and we won't get on a government rant, but the government comes in and closes you down, and then the government comes back and gives you the money that you lost because the government closed you down. It's really what's happening here. I've been doing this work for 40 years, and I'll tell you the first time in my career where there's been so much government interaction. There's always been incentivized grants available, either federal grants, but more prevalent have been local county grants and state grants, incentivizing companies to do certain things. This is a federal government giveaway at this point where they recognize that actions by some state governments and some local governments cause businesses to close, and the federal government is stepping in and now saving those businesses. So restaurants weren't the only companies that were closed. Of course, I have hairdresser clients and I have gyms that were closed. So maybe there'll be a gym bill and a hairdresser bill and who knows what else. Just so you know that this program has $28.6 billion of federal money in it. The federal government has estimated that there's been a loss of $250 billion in restaurant revenue over this pandemic time. So it is going to be a first come, first serve program. So just so you know, there's $28 billion that is going to replace $250 billion. Now, there was $800 billion funded through the PPP program. Not all of that went to restaurants, of course, but the part that did go to restaurants would come off of the funding piece. But this seems to me like a program that will run out, and it may run out quickly. If this program gets rolled out, there is a priority for rolling this program out first. And although we don't have any real details on this, but we do know that it will be rolled out in 2 phases. And the first phase will be addressing women-owned restaurants, veteran-owned restaurants, and then restaurants owned by oppressed groups. So that's the priority of funding. That gets funded first. Once those groups are funded, then the second piece of this program, as we understand, will roll out. So be ready, have your SAM report ready with the government. Make sure you're on the SBA roll. This is an SBA sponsored program, so it's going to come through the SBA, and they got a lot on their plate. So make sure you're ready for this, and then when the switch happens and you can click it on, you want to make sure you're ready to push the buttons. If you are a woman, veteran, or disadvantaged business owner, you want to go first. And if you are not, you want to be ready to go second, because this money will run out.
Yeah. Make sure your financials are in order. So meet with your accountants. They're asking for a lot. And if there's one of the bullets here mentions the SBOG checklist. If you go to sba.gov, under that program, there's a really detailed step-by-step list of what you need to do, what you should expect to submit with the application. I would suggest doing that and assuming it will be the same for the restaurant plan.
Yeah,
that could take some time.
Yeah, you will have to prove your loss of revenue.
Articles of incorporation, just all these old documents that don't let them trip you up at the last minute. If you use that as a guide, I think you'll be well prepared to apply when it opens.
Yeah, if you obviously have your 2019 tax returns done, and if you don't have your 2020 returns done and you qualify for this grant program, I would push your accountants to at least get the 2020 repaired as far as it reflects your sales numbers, because that's an easy proof that you qualify for the program, and it monetizes how much you'll receive from the program. So push your accountants, except us, to get your tax returns done, at least to the point where you can use them for your application.
But be gentle. It's been 365 days of March for you. So yes, our tax people are
the tax teams
losing
are doing. Let's go into. I just want to go through our common things like PPP. So effective, just some changes that came through. One of the biggest changes is that the PPP 2 loans were scheduled to expire tomorrow, 3/31. And the House and the Senate did vote to extend the deadline for applying for the second loans to May 31st. So you have another 60 days. We found out today that the president has not signed that yet. So it's on his desk. He needs to sign it. So if anybody's got his ear, give him a call. Tell him to just put his name at the bottom of the page and sign that document today so it doesn't expire tomorrow. I don't know what would happen if he doesn't sign it, but it certainly has been passed by both houses.
I also just read the money could run out mid-April. They're expecting that to run out mid-April. So if you have to apply. Yeah,
if you haven't got your second application in for PPP, make sure you get it in as quickly as possible. Some of the banks locally had shut their application process down, but I understand that with the extension, they'll reopen the process. Those loans get scrutinized by the bank, then they go to SBA to get approved. And everybody's been through the first program. This one, we have had some clients that have gotten their second fundings already. So the program does work. and make sure if you're eligible to go get it.
Sure.
If you're a sole proprietor and you don't have any employees, and you're entitled to the $20,833 loan based on your gross sales now, not on your net income, make sure you go get that loan if you have a need for the money.
Every Schedule C filer should be looking to see if they're eligible. We're seeing a lot of that.
A couple of another issue that we want to make available for employers is the expanded leave program that had expired at the end of the year has now been reestablished, which allows companies to voluntarily get into a program that will pay their employees if they're affected by COVID. We'll just say is affected by COVID. The federal government will reimburse those employees certain amounts up to limits. But that program, which was very lucrative for companies who had either sick employees or employees had daycare issues or schools were closed and they had to be home, there's a whole list of qualifications that allow you to get this money. That program ended at the end of December, and now it kicks back in April 1. You can voluntarily opt into the program. If you don't opt into it, you are not in the program, but you do need to notify your employees that you have accepted this program. We've done it, and we'll allow our employees who are still affected by COVID to be able to get personal time where they're not in the office, and their pay will be reimbursed to the employer through a tax credit program on their 941 tax payment forms. So if you haven't opted in on this, you should do it before April 1st, which is in 2 days. Mm-hmm. Let your employees know. Yeah. The other piece that just came out was, do we have the COBRA on here?
I didn't add that because that's a mess.
Yeah, I mean, if you have employees that are facing a COBRA situation where they're paying COBRA, that the federal government's going to cover COBRA costs for employees that are paying it either through the employer or through the employee. So just make yourself aware of those changes.
And instead of relief, that one is more information about a headache that employers are going to have.
It's a headache. Let's move to the employee retention credit. We just want to cover that as well. So this employee retention credit was something that came out in December. It was signed into law. Nobody understood it for about 2 or 3 months, but now we're starting to understand what it is and how lucrative it can be. And really what it says two things. So if your company showed a loss in sales in 2020 in a specific quarter over the same quarter of 2019, if that drop in sales was 50%, then you qualify for the employee retention credit for that quarter and the subsequent quarter. If you were closed partially or fully by a government shutdown, you qualify automatically for the employee retention credit. What is the credit? Generally, it allows businesses to take credit up to $5,000 per person in 2020. That's $5,000 one time in 2020, and then $7,000 per employee per quarter in 2021 against certain payroll taxes. If you are eligible for this program in 2021, you need to have a 20% reduction in sales in any calendar quarter over the same calendar quarter of 2019. So you're going back 2 years before pandemic time and comparing what's happening in 2021 to what happened in 2019. It's simply a reduction in sales, revenue, cash receipts, however you want to determine it. If you file your tax returns on a cash basis, but you keep your books on an accrual basis, you have an option. You could either use either method to determine whether you qualify for that 20% reduction. If in the fourth quarter of 2020, your sales were down by 20%, you qualify for the first quarter of 2021 automatically. Now that first quarter is ending tomorrow, so you'll know whether your sales are down or not for that quarter. If you have not done the qualification yet based on last year, once your March is closed, then you want to do your sales computation for the first quarter of 2021 over the first quarter of 2019. If you're down by 20%, you can get up to $7,000 per employee for that quarter. So if you have just make it easy. If you have 10 employees who make over $10,000 for the quarter, you could get a $7,000 credit, tax credit per employee. You could get a $70,000 tax credit. You can apply that tax credit to your 941 tax payments for the first quarter. Now the first quarter is over, so you can apply them to the second quarter. And if you have if you're over the amount, you can ask for a payment back from the IRS for the overage, or you can just continue to carry those credits forward and offset taxes. When the bill was first passed, and this is how fast things change. It's crazy. When the bill was first passed in December, it took us about 60 days to really understand.
Yep.
Well, by the time we understood the bill, they came back.
5,500 pages.
Yeah, 5,500 pages of legislation.
Bob read them all.
Yeah, Bob read them. Bob read the Cliff Notes, which meant he asked Kristen what it meant, and she gave me the answers. The rules changed, so on March 11th they came out and they with the new Recovery Act that President Biden signed March 11th, which brought the stimulus payments in, and it brought some changes to the ERC rules. And one of the largest changes was they extended the credit of $7,000 per quarter for all 4 quarters of 2021. So if you have an employee who earns $10,000 a quarter and he works for all 4 quarters, he makes $40,000 a year. If you qualify for this employee retention credit, you can get a tax credit for that person up to $28,000 for that year. So you pay him $40,000 in wages, you get $28,000 back from the government if you qualify for this program. That's how lucrative this program is. We have processed applications for tax credits in excess of $1.5 million in 1 quarter for clients of ours. So make sure you know these rules, and make sure you're meeting with your accountant to be sure you're taking advantage of this program. The beauty of this program is there really is not a timeline on it at this point. So if you qualified for this back in 2020 and you find out now that you qualify, you can go back and recapture some of that tax that you paid in 2020 for whatever quarter you qualify on. If you are just learning about this now and you qualify in 2021, you can start the program now. This is a tax credit program. So really the only thing you have to do is be paying your people in the normal course of business and be eligible for the program. And you'll see that you could make sure your employees, if they make $40,000 a year, they don't make $40,000 in 1 quarter. Make sure they spread it out over 4 quarters if you're smart. There's a tax tip for today. So the program runs through the whole year. If businesses were not in business as of February 15th, when the quote pandemic hit, there are eligibility for companies that started after that point to get recovered costs. If you are a financially distressed employer and you show a 90% reduction in receipts, you'll be able to treat all wages up to $10,000 as qualified wages. The only thing you have to watch is that this program, along with the PPP program, and if you're in a restaurant business, along with the Restaurant Recovery Fund, you can't double dip payroll costs to take advantage of all 3 programs. So there are some important things that you need to do now if you're a part of this. Let's just do one more slide. It'll show them. This is what you need to do right now. If you're eligible for this program, this is what you need to do. And here's a checklist of what has to happen first. So you want to make sure that if you have PPP money that has not been forgiven yet, that you do the calculation to get full PPP forgiveness. That's number 1 priority. And you do that by taking the minimum amount of payroll that you need in order to get PPP forgiven. The PPP rules say you have to spend 60% of your loan amount on payroll and payroll-related costs, 401k, healthcare, some taxes. The balance of that is the wage number. You want to use the lowest wage number possible to get forgiveness on your PPP, even if you haven't applied yet. We're not telling you that you have to apply. Then you'll know what wages are available to get the employee retention credit here. And then you can do your employee retention computation. And if you know what those wages are, you can get the ERC computation done now and start getting that money now. the way you get your money is you process it through your payroll service, and you submit the information to your payroll company, and the payroll company will then reduce the amount of withdrawal it makes to pay your taxes by this credit amount. So it's instant cash. It really is instant cash. So make sure you follow these steps if you're a PPP company and an ERC company. Here's the comparison chart year over year. We'll just pass through this because we talked about the differences here. One of the downsides of the program is what we'll call excludable wages. And we're still waiting for some clarity on this because it doesn't seem fair. Of course, the government is trying to prevent your company from going out and hiring every relative just to get tax credits. And I understand that's fraud, but the way the program is structured right now, all of these relations are ineligible for any of these tax credits, relations to the owners of the company. We hope that we get some clarity on that soon, but we don't have any yet. We've asked our organization, the AICPA, has requested clarity on it. So if you're eligible for that, please get in front of your accountants now. It's not the best time of year for accountants to do anything but the taxes, but sometimes timing is important. You can discuss this last
and
update.
just also, if you talk to your accountant or you looked at your receipts and you think you're eligible and you're hearing you're not, definitely just reach out to us, because we've had more than a handful of businesses who were told they were not eligible that clearly are. The receipts test is very clear if you meet that, but there's also if you were shut down by government order. So some restaurants might be at or close to where they were in 2019. While they're limited by government order, they're still eligible. So just definitely reach out if you think you might be eligible. Don't leave any money on the table.
Yeah, and some of our clients that aren't restaurants and aren't gyms and aren't hair salons made a determination that they were shut down by government order because certain aspects of their business were not allowed to continue. Specifically, we have some market research companies that would lead focus groups to do their market research. Now, the business itself was not shut down, but the focus groups were ended because of the lack of an ability to gather in groups, but shut down by the government. So that significant part of their business was closed. They do qualify for this employee retention credit. So look very carefully at your business. If you were closed, and anyway, I know car dealers were closed for a while. Some construction companies and builders were closed for a while. So during those periods, if you were closed, you do qualify during the shutdown period.
So the last thing we wanted to cover, it's a pretty recent update. A lot of businesses took out economic injury disaster loans last year. It was one of the programs established with the CARES Act specifically for COVID. It had the advanced component. For anyone who did take out an EIDL in 2020, earlier this month, the SBA announced there would be no payment due until 2022. So 24 months from the origination date of your loan. A more recent announcement is that there was a $150,000 limit on the amount of the EIDL a business could take, and they did lower that limit to preserve funding for the maximum amount of businesses. And this week it was announced that they would increase that maximum loan amount to $500,000. These loans up to, I think, $200,000 do not require owner guarantees, and now there's a 2-year deferral for payment. They're, I think, a 30-year term with 3.5% interest rate. So some of my clients are very debt averse. And now we've all become used to forgivable loans where it's just free money, champagnes and sailboats. But this does have to be repaid. But 2 years, low interest rate, and a long repayment term is something that people should be considering. Apparently, if you have the loan, if you already have an EIDL or have recently applied, the SBA will automatically reach out to you and give you the opportunity to get more if it's available. So it will be based on whatever they calculated for your 6-month period of economic injury. They will expand that to a 24-month period to increase the amount. So you should be able to figure out with that little calculation how much you would be eligible for.
Yeah, this is a great program. Again, government-sponsored program through SBA that is really gives you the availability to put $500,000 of cash into your company, and you can pay that back if you bring the cash in and you find you don't need it and you don't want to have the debt on your books. You can pay it back early. It's a really unique loan program, and it really it will accomplish what it needs to accomplish, which is just really getting cash into the companies. The $150,000 found that most companies found that was inadequate, and when that program realized that program was established in March of 2020. A lot of things have happened from March. Nobody expected the pandemic to spread a year, and the SBA came to the table and really helped out here by tripling the amount of the loan monies.
For businesses like gyms and before the RRF, the restaurant industry, the PPP was not really adequate because of the payroll burden not being that high. So this was a good option for businesses like that. And there are some other SBA lending programs that are also available that people should look into. You should contact your lender.
If you have any questions, we have a website set up specifically for COVID related issues, and we have an email account that gets addressed pretty quickly. So if you have questions, you can email them to cares@brinkersimpson.com. And our website is www.brinkersimpsoncares.com. You can check that website at any time. We update that almost daily. As new information comes in, we'll have Laura's presentation on there. We'll have the federal program on there. All of the updates on PPP. We'll have the picture of Joe Biden signing the extension for the second PPP loan once somebody gets him to sign it. And any updates that we have will be on there, almost daily updates. So pay attention to that.
And
if you can.
definitely, we're pretty active on LinkedIn as well. So if you're on LinkedIn and you spend time there, we do update that pretty regularly as well. Both the firm page and all of our employees share information. So follow us there, and you'll find up-to-date information posted, multiple times per day. So, I think that's it.
We have questions? Jess.
Let's see, who's here? Jacqueline or
Jessica's there.
It doesn't look like we have any questions in the chat or the Q&A.
Good.
If everybody knows it all, they can they come help us? Can they help us process all the applications? Thank you.
There's a lot to learn, so we're happy with the chamber to allow us to continue to update the information, and we appreciate the partnership with the Commerce Center and Laura to have Laura cover the information that she's very on top of coming down from the state and the county. I mean, the county has been very active in the grant program, and I know a lot of our clients were able to get grants all through that program, which they're not massive amounts of money like some of the federal programs are, but when you're struggling and you get a $7,500 grant, that's $7,500 of free money. Yeah, I mean, it's a month rent or it's a month payroll, and you need that money. So we appreciate Laura's information as well.
And most of these are tax free, so it really is truly relief.
We were very fortunate in Delaware County to have a county council that invested about $20 million in stabilizing the local economy with a focus especially on our main streets. So it didn't happen everywhere, and we were happy to be able to help facilitate those programs for them. Absolutely.
Hey, Laura, are you involved in the rental assistance program that's being rolled out?
I am not. Department of Human Services is doing that in conjunction with planning, but they do believe they have a separate website up, and we can get you that information if you'd like.
Yeah, so there is a state program for rental assistance, and both residential and commercial, from what I understand. And the payments are going direct to landlords now, not to the tenant to pay the landlord.
Philadelphia did that, worked out really well.
Yeah, so the problem with landlords are, and I'm a landlord, you don't want to rent your property right now. If you have a vacant property, you're afraid to rent it because that tenant who goes in there really cannot pay the rent, and you can't get them out. You can't evict once they're in there, and they go in and damage your property, and then it costs you double.
Yeah.
So this program that they're rolling out shortly will protect the landlords. At least they'll get their rent.
There's a moratorium on eviction.
Yeah, you can't evict. Yeah, it's very, very frightening. So,
All right. Well, since there's no questions, thank you to our friends at Brinker Simpson and Laura from the Commerce Center for informing us all today. We really appreciate it, and we'll make sure we post this and share it with our restaurants who couldn't join us today. So thank you again, and hope everyone has a great day.
So,
thank
thanks a
you.
lot.
Thanks,
Thank
Josh.
you.
Bye now.